Just 4 trading days are left. We're joined now by Invesco's Chief Global Market Strategist, Kristina Hooper, and Allianz Global Investors Portfolio Manager, Burns McKinney. Thanks to you both for being here this morning.
Thank you.
Kristina, let me start with you. We had Byron Wien on earlier this week, the veteran strategist. He's seen a few market cycles in his long career. When I asked him what's the most important single thing, he said the Fed. You seem to agree. As we head into next year, given the change that's occurred in the Fed, what can we expect and what does it mean for stocks?
I think we can expect markets to do better than the general economy because I think monetary policy is geared towards supporting markets better than it is geared towards supporting the economy. So that suggests that U.S. stocks should do well. Not as well as this year, but they should do well. What's interesting, though, is what we saw in September, which was the end of balance sheet normalization. And I think that suggests that emerging market stocks should do better than U.S. stocks in 2020.
Why?
Well, because balance sheet normalization was creating a liquidity suck, and it was really negatively impacting emerging markets equities. In fact, if we look at the full year for EM indices, they underperformed the U.S. pretty significantly. But if you look at the 3-month period, which is about when balance sheet normalization ended, you see EM outperforming the U.S., particularly China outperforming the U.S.
Because?
Because the liquidity suck was ended by balance sheet normalization ending. So there's just more liquidity in the markets, and that means more money flowing to EM.
Now, Burns, give us your perspective here. I understand you think that a lot of the gains that were expected or hoped for in 2020 are actually being pulled into the fourth quarter of this year. So how does that impact your outlook?
Well, I do believe that, Christmas came early for the stock markets during the fourth quarter. You had a handful of positive geopolitical news. There was the election in the UK took out some uncertainty from the markets there. You had the trade war at least come to a near-term détente or resolution with the Phase 1 trade deal and a commitment from the Fed to keep rates for lower longer. And so we did, I believe, pull a lot of 2020's gains into the fourth quarter of 2019. And as a result, equities, we had a great run in 2019. Stocks have gotten to be a little bit rich. And so going into 2020, we expect that we don't see a recession on the horizon. And so we do expect at least positive returns, but they probably should be a bit more muted this year. Last year, the big concern was the Fed. I think going forward into 2020, probably one of the biggest concerns will be the election. This is a bit of a unique year because there's probably a more divergent and binary differences between the two outcomes in the election, it looks like, than we've had in a really long time. And so that could probably add to volatility this year.